Today I'm going to delve into why I love boring old Conagra stock. So stick around, it should be a great video. Hello, my YouTube friends. My name is Adam Kahn, and this is Investing with Adam K. Before I discuss what I really love about Conagra and delve into those numbers, as always, keep in mind this is not financial advice. You guys need to do your own research when making your financial decisions. Reach out to a financial planner, and you shouldn't be listening to me or any other YouTuber for that matter when making financial decisions. In general, I kind of suggest that because what goes on in your life is going to be different in mine, and your goals with your financial investments are totally just going to be different than what my goals are. So keep in mind, this is entertainment purposes only. If I'm boring, well, oh well, you've lost a little bit of time of your life. So, what do I really love about Conagra? I mean, I couldn't think of a more boring stock. And in some ways, that's a little of what I love about Conagra and kind of goes to my disclaimer about what works for you may not be what works for me. We had a huge roller coaster ride in the markets this past week, maybe even 2 weeks. And companies like Conagra, they don't really participate in it. Not in the up moves, not in the down moves. And for me, who's old and doesn't need a heart attack, in some ways that works out better than even the companies like Hims that I've been trading. I mean, I don't know if any of you have watched Hims, but it shot up from basically $50 a share to like $64 a share, all the way back down and closed, I think, below $50 a share, all in like a week and a half. And for an old timer like me, it's just the emotions and the swings. It makes my heart go nuts, and I just don't need it anymore. Now, don't get me wrong, as a kid, I traded currency futures, which are super volatile and super leveraged. I've just gotten to a point in my life that big and boring and things that don't move a whole lot are a little bit more exciting on some levels. And I'm going to show you ways that I've been using for Conagra that get you really good returns where you could actually outperform the markets with it. Now, it takes a little bit of work. It takes some time. It is not just buy it, set it, and forget it. And buy it, set it, and forget it doesn't really work for me for the most part on the things that I talk about on this channel. Now, those of you who've been watching for a while, you know that I keep different accounts for different things. My main account and my main advice in general is typically set it and forget it. Now, I own what I think are some great companies. I put them in an account. It is a total old-fashioned type of account. It does not have online access. I cannot make trades. I cannot make transactions. I can't request checks. There's nothing I can do online in that account. Now, I find that is a great security feature on top of anything else because I don't even worry like if data gets breached or this or that because nobody can do anything. There's no way to make those things happen with that type of account. You have to actually call in. The advisor knows me personally on top of it. He knows my voice. He knows who I am. And if anything strange ever happened, he'd probably call me back and ask why I wanted to do that. I've also given instructions to him that if I sell anything or do anything, like, and you allow me to without questioning, you're kind of going to be fired. So the goal is I just own what I think are great companies. And if you guys want examples, it's things like Amazon and Google and Chevron and things like that. And my timeline is probably 10 years or plus. So when I talk about Conagra, I plan to own it for a very long time, but what I've been doing is utilizing option strategies, and I'm going to go over some of it with you guys today to show how I can turn a stock that may not go anywhere into one that could potentially make, I don't know, I'm averaging about 25% returns when I annualize them on it. And that seems to work when the stock goes up or down or whatever direction, because I'm getting the returns from the premiums of selling the options. Sometimes I get assigned stocks if the stock falls and I have some puts that I've sold, and sometimes I get shares taken away. So what I did is I wrote down a few of my, little handy dandy information. So if I'm looking away from the camera every now and then, I'm old, my brain doesn't work so well, I'm not so bright, so I can't memorize all this stuff. So I'm going to kind of like use my little cheat sheets. But right now, the dividend yield on Conagra is 7.7%. For me in general, that's an incredible return on my investment to begin with. And what I'm looking to do in the strategy that I'm going to talk to you about, let's pretend we're implementing the equivalent of 1,000 shares. Conagra closed around $18.50. I think it was like 18.56 to be precise, but that doesn't mean that's where it'll necessarily open up on Monday. But total money allocated for the account or for the trade, $18,500 approximately. I would be buying 500 shares and potentially selling 5 puts. And again, I'll go into all of that. But their payout ratio on that 7.7% dividend is 78%. And you have to keep in mind, they had some expenses recently. So I think it's probably actually lower than that as time moves on. Their earnings have been decent. They've been doing just fine the past few quarters. And even at the 78%, that gives them some room for error, which means the dividend is pretty secure. They should be able to continue to pay it unless something weird happens going forward, because Conagra is a really big conglomerate. I'm even going to go over the companies that are part of their portfolio, or some of them, so that you understand they're really well diversified. They're in a boring space. They're in food, which doesn't have huge margins and doesn't have big swings. But again, for me personally, I don't know that I really want the big swings. I want some consistency and some comfort that things aren't going to have huge moves or lose a lot of money in a month or 2 months. So their earnings are $1.77 over a year, and their dividend currently is $1.40 over a year. And they have a current PE ratio of only a little above 10, and their future, like next year's earnings, is around 7%, which is pretty amazing and pretty low. And that's another thing that I'm really attracted to. Now, again, food space, it shouldn't be super high, but it is lower than most of their peers when I looked at it. So here's some of the companies. Again, I wrote it down, so forgive my eyes kind of veering away. So they own Duncan Hines, Hunt's, Birdseye, Healthy Choice, Ready Whip, Slim Jims, Marie Callender's, Pam, Frontera. I don't know if you guys are familiar with Frontera. There's a Frontera grill, and obviously they don't own that, by a really good chef. And I used to live in Chicago. It was a phenomenal restaurant. Well, they do like little jars of, salsas and stuff like that. And Bayless, is that his name? Rick Bayless, something like that. It's a really good product. Anyway, I'm not here to sell the product. But they're also Hebrew Nationals, Orville, Redenbacher, and Swiss Miss, amongst others. I just wrote down a few of the ones that I recognize the name. So Conagra is really well diversified, even though the stock is super boring and hasn't gone anywhere. Now, I love that it's dropped as far as it has over the past few years, and I hadn't paid attention to it. And part of the video is I've been trading it now going on 3 months and having really good success, and really like what I've been seeing. So I wrote down a couple of examples of the things I kind of look for in it, and the different types of options. One using options that are 2 weeks out, and one using that are a month out. Now, in general, if I can get 15 cents per option, that's a 9% return. So already that's a decent return. Then if I have 500 shares of the 1,000 that I've implemented the cash for, that I'm getting a 7% return, you have to cut that in half because it's only half the shares. Well, that's another 3%. Not a huge return, but a huge return all at the same time. Taking Conagra and turning it into over a 10% yield just alone based on what I'm talking about there, to me already starts to get interesting. So it closed at $18.56. I'm using the October 31st options in this example. And if you guys want some information on what I'm talking about with the options, just make a comment in the comments below. I will answer it as detailed as I can to really explain options and how they work and what I like about them, beyond just rambling through in the video. So if I sell 5 of the 19 calls, it closed at a bid of 15 cents, offer at 20 cents. So if I'm selling it to the people who are buying it, which is the bid, at 15 cents an option. Well, that's only 2 weeks. Now, their dividend is also expected to be October 30th. So if I own the stock on the close by the 29th, and I still own it by the close of trading on the 30th, I will also get a 30-cent dividend. On top of that, if I bought it at the closing price of $18.56, I've made 44 cents appreciation in just 2 weeks. Well, the 44 cents plus the 30-cent dividend plus the 15 cents for the option is 89 cents in only 2 weeks. I know that's not a lot of money, but percentage return on a stock that's trading only $18.50 is pretty incredible, because if you multiplied that and did that annually, you're talking about $23.14 over a year on a stock that you got taken on a $19 option. Now, keep in mind, when a dividend company pays that dividend, theoretically, they should drop the amount that the dividend is. So a 30-cent dividend should drop Conagra 30 cents. So if it's trading 18.56, it should be 18.26 after they've paid the dividend. And again, forgive me, point of information because I said it wrong. That's actually the ex-dividend date. The payment won't be until November, but that is when it should be accounted for in the pricing. If we flip to the other side and look at an $18 put, it closed at 20-cent bid, 35-cent offer. Now, I'm going to use the 20-cent bid. Actually, I even looked at a 17.5 put, which was 10-cent bid at 15-cent offer, and thought about what happens if I sold the 17.5 put. Because I'm willing to buy Conagra or more shares at either 18 or 17.5, even if it loses the 30 cents from the dividend. So the 10 cents times 26, because it's 2 weeks out, 52 weeks in a year divided by 2 is 26. So that would be $2.60. If I don't get exercised on those options and I collect that premium and nothing else happens, that's over a 14.8% return. So again, pretty impressive for just selling some options. The risk is the stock falls and it gets below the 1750 strike and it just keeps going lower. But again, I'm happy to buy Conagra at that price point. I would then flip and sell calls against it to continue to collect premium. You don't collect the dividend, obviously, because you don't own the stock when you've sold the puts. So all you're getting is that 10 cents. And at the 18 put, if somebody wanted to look at that, the bid offer was so wide, I would try to cut it somewhere in the middle and see if I did a little bit better than just selling the bid. Either way, I hope that wasn't a little too convoluted. I'm going to hit pause and then I'm going to go through a month out, because I think for most of us, if we could do the trades once a month, that works even better. And the math is pretty amazing even on the once a month options. So now if I go out a month, I hope the plane noise isn't too loud, to the November 14th options expiration date, and I'm looking at one put price, a strike price, and one call price that I'm going to analyze for you guys. So if I look at the 17.5 put, it closed on Friday, 20-cent bid, 35-cent offer. Now, I used the 20-cent bid price. Now, again, that's a pretty wide bid offer. You can try to cut it somewhere in the middle, and the numbers would work out even better. But that's 20 cents once a month, so 12 times a year, comes out to 240. Divided by 1750, which is the strike price that I use, you're getting a 13.7% yield. If nothing else happens, if you're able to sell those puts, you don't get exercised, you collect that premium on that dollar amount that you've accounted for that account. And what I mean by that is, if you're doing one option and you're selling a 1750 put, I would put on the sidelines $1,750 in case that gets exercised, so I have the money available in order to be able to buy those shares. Does that make sense? Because when you sell a put, if the stock goes below that strike price, you're committed to buying 100 shares at that strike price. That might have been what I skipped a little bit earlier. So keep in mind to have that cash available for however many puts you're selling. The only way that I find people really get hurt on these strategies is when they get over levered and overexcited and trade too big and put on positions that they really shouldn't be. So if you're selling one put instead of doing five, like I was talking about earlier, one put on a monthly November 14th option, I would be ready to have that $1,750 in case it gets exercised and I have to buy the shares. As an annual return, though, again, you're not getting the dividend, you're just collecting that premium. But 20 cents a month is a lot of money on something like Conagra and on $1,750. It adds up, even though it's so boring. The other thing is, like I said, it's 20 cent by 35 cent. I'm guessing you could do better than the 20-cent bit. If we flip it to the other side and now we sell a 19 call, it was 10-cent bid by 30-cent offer. Again, I'm only going to use the bid because I want to use worst case scenario. But if you get 10 cents for that option, so you collect that, you don't have to do anything else. You get that money, you keep it no matter what the stock does. You're also going to get that 30-cent dividend from October 30th. Again, doesn't get paid until after these options and these calls expire, but you will get that money. So you're going to get another 30 cents. And again, based on Friday's close, a 44-cent premium. So you add the 10 cents, the 30 cents, the 44 cents. You have 84 cents in 1 month's time. Multiply that by 12, you get $10.08. Divide it by 19, which is the strike price. That is a 53% yield on Conagra. If you bought the stock, it was above 19 at the expiration date of the option, and you collected the premium for the call, you got the dividend payment, and you collected that extra appreciation. Now, that's optimistic, so I don't want that heard the wrong way. There is no guarantee of these types of returns, but your downside is a 13.7% yield, and I'll get into that because I know that's not an exact, and your upside being a 53% yield. Your value of your actual holdings will change. So if the stock drifts lower, you're going to be down money on the stock that you own. But I just continue to adjust accordingly because it's fluid. It changes all the time. If I get exercised on puts and I have to buy more stock, for the example in this, if it's a 17.5 put, I might literally turn around and sell a 17.5 call and not worry about making money on the stock and just try to collect those premiums from the options I'm selling. Potentially, I might try to sell an 18 call and try to get an extra 50 cents. And again, what I like about Conagra, the reason I love boring is it hasn't really done anything. It hasn't gone anywhere. At some point, it will start to trend either higher or lower, and it may change all of that, and it may move too quickly where you get out of the trade or the trade can't be done anymore. But in the meantime, this has been a really good working moneymaker that's really boring. And then if I don't want to do just the 19 calls, the 19.5 call was 5-cent bid at 20 cents, and the 20 call was 5-cent bid at 10 cents. Even those nickels and those dimes add up in a stock that's only a $19 stock or $18.50. And over a full year, if you do the math, it really does add up because you also get that dividend yield, which I would be happy about on its own. I mean, quite honestly, if I had some guarantee that would pay me close to 8% yield, that I knew nothing could go wrong, which is not the case here. As always, financial advice. This is not financial advice. You guys need to do your own research. If I could get that as a guarantee, I would be thrilled and I would be all done. Like, it just isn't the case unless we had inflation and things changed. So I hope you guys find that interesting. Again, it's why I really love Conagra, which is so boring. I'm also finding the same with Bristol Myers and Verizon and Pfizer, some really boring, slow-moving companies that I'm happy to collect small premiums on the options, and I've been looking at some more. I've been veering away from the ones that are high volatility just because of my old and what really fits my personality, which goes back to that, you need to do what fits you. Like, if you like the stuff that flies around, great. I mean, okay. This is not a brag, but you guys know that I picked up some OKLO stock I actually got taken on a few calls that I had sold to sell 30% of the position, and now it's too volatile. I don't even know what to do with it. I've been very lucky. I'm happy to that it's gone my way, but it's just not the type of investment that fits my personality. Even though I love the concept and I love the idea in my head, I know the reality of who I am. Similar to anybody else, you need to do that analysis. So I might do two videos today. The other one might be tomorrow. Jacob's, obviously it was Friday. Jacob's account obviously had expiration. He got assigned a couple of shares of LAC and also Open Door, I think. So we'll go over the options that he's going to sell for next week, and I might talk to him about implementing something with Conagra as well. So we'll see, and we'll do that video later also. Anyway, as always, if you haven't already, please hit that subscribe button, smash the like button, make some comments in the comment section. I hope I didn't bounce around too much. In my head, it sounded all jumbled while I was talking about some of it. But I think these are some great strategies for some of you that are old like me and potentially don't want the swings of the stocks that might 10x. And don't get me wrong, they're out there and I love those too. I think Hims has a real chance. I think Soundhound. I like what's the other one? I have SoFi. I still have position on, and Intel. I'm still committed on Intel, and I have a nice position in Intel that I haven't talked about a whole lot. That I've actually added on to the trade because in the whole roller coaster, while it bounced around a bit, it really hasn't pulled back as much as some of the other stuff, which is exciting to me. Now, they do have earnings coming up next week, so they could go any direction, all over the place. I did something I almost never do, and I bought some puts, and I'm never an options buyer. But I had enough of a lead in it that I bought some for the end of the month, giving an extra week after the earnings of next week in case the market really craps out on Intel and I get crushed. I didn't want to give away all my profits. Now, the volatility index on it is absurd, so I know I totally overpaid, but I guess that's what puts are for on the other end, which is insurance. And I guess I'm an idiot too sometimes and do things that I really wouldn't advise. Because as I told my son, buying insurance is for idiots. Well, I am an idiot. Anyway, once again, do me a favor, hit that subscribe button, smash the like button, make some comments. I hope you have a great weekend. We have Miracle League today. Go out and volunteer and help people out. It's a really nice thing to do. Have a good day.